there's a lot to be said for why we're seeing such positive moves across the board. As you pointed out, markets are looking beyond the winter wave of coronavirus. They're looking to the point where the vaccine is mass distributed and we can see an end to normalization. They're thinking about future fiscal stimulus. They're thinking about central banks staying on hold and continuing to provide unlimited liquidity through all of 2021. But of course, as you said, look, valuations are stretched. When you see these kind of significant moves, as you just named, of course, there will be concerns starting to grow that things are looking a little bit too stretched. But I think, look, we have to remember the fundamentals are very, very strong. Right? Stimulus, we've seen how strong that can be in pushing capital markets forward. So I think we have to think about that. But at the same time, there will be wobbles ahead. The road ahead is not going to be very smooth, and investors should be prepared for that volatility as the months go ahead.
Because it does seem like nothing is going to stop this market. I mean, and we're seeing these gains. And listen, they're very good for our investors. Retirement plans, 401ks, 5 college savings plans in the United States. This is good news. But at the same time, the idea, the concept that stocks only go one way, and that is up, I guess can be a dangerous one, particularly for those newer investors that are out there. I mean, if you Google trends, things like how to buy Bitcoin and how to buy stocks and things like that, they're soaring. A lot of new people are coming into this market, which is, I'm not going to say too hot. It's not my job to say that. But when you have stocks gaining 60 billion in market value in a day, Seema, you have to at least sit up and take a little notice.
No, absolutely. And, I think you're right in saying we can't assume that there are no risks out there. Our fundamentals are strong for this year, and we do believe that 2021 is going to be a generally good year for risk assets. But at the same time, by the end of 2021 and into 2022, some of those concerns start to bubble to the surface. The main ones being the huge increase in debt, both from governments and corporates over the last year. That has to be paid back at some point. We're thinking about rising inflationary pressures. We do expect inflation to pick up this year, not to a point which will prompt a U-turn by central banks, but at least to a point which causes market participants to sit up and think for a moment, how long can this go on for? So you're absolutely right. There are risks ahead, and investors do need to be cognizant that it's not always up. That direction can move the other way.
Well, I think you brought up an incredibly important point, Seema, and that is all that debt, that basically free money, negative interest rates with inflation in many cases that has been issued. And that's the reason at the beginning we highlighted the 10-year bond yields. They're only at 1.07% in America. You work for Principal Global, an insurance company. That yields, interest rates are everything to you guys. I'm not going to make too much of 1.07%, Seema, but if we see any kind of more meaningful rise in rates, I mean, that is the super tanker that can shift a lot of assets, can it not?
It can, I think, but the important point is almost the speed at which those yields are rising. We are expecting that gentle drift upwards. Certainly with the global growth recovery, we should see that. I think it's how quickly do they move up? Because if we start to see them shooting up, hitting significantly higher levels within a couple of months, that is a concern for equity valuations, right? And it does start to bring up some question marks around the debt levels. How expensive it will be for governments to pay it back. If we're seeing a gentle drift higher, then as you said, for financials, it's fantastic news. The value trade that we've been talking about for 10 years, we've kind of been long waiting for that. It is great news for that position. But why is it moving higher? And should we be worried that at some point central banks will start to pull back?
Shepard Smith here. Thanks for watching CNBC on YouTube.